Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So today I will present about chapter 26, which is internal and governmental financial auditing and operational auditing. So me myself, I'm AMIRA HALIM, will start the presentation with the internal financial auditing. So what is internal financial auditing? So internal financial auditing is an independent objective assurance and consulting activity designed to add value and improve an organization operation. It also used to evaluate the company internal control, including the corporate governance and also accounting process. So for the internal financial auditing, it also have their own rules in the company, which is it helps an organization to accomplish its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control and governance process. It also helps to maintain an accurate and timely financial reporting process. So as example, inventory audit. So inventory audit is they do the inventory audit to ensure the physical inventory counts match with the company financial report. So let's move on to the next slide, which is for the Institute of Internal Auditors Malaysia, IIAM. So in IIAM, they provide a professional guidance of internal audit. So they have two types of professional guidance, which is for the ethical principles and code of ethics, and also the professional practice standards. So for the Institute of Internal Auditors Ethical Principles and Codes of Practice, they include of four criteria, which is integrity, objectivity, confidentiality and competency. So for the integrity, the internal auditor need to be honest in writing the audit report. So for the objectivity, the auditor need to avoid the biased attitude in reporting or to the employee. And for the confidentiality, the internal auditor need to that all information that received by the internal auditor to do the report, they need to keep it as a secret from others. The information they need to keep by themselves. Okay, for the last one is competency. Competency is the internal auditor need to have an ability to apply knowledge and skills to achieve their intended result. So let's move on to the next one, which is the Institute of Internal Auditors Professional Practice Standards. So they have two standards, which is attribute standards and also performance standards. For the attribute standards, it addresses the characteristics of organization and parties performing in the internal audit activities. Meanwhile, for the performance standard, it describes the nature of internal auditing and provide a quality criteria against which the performance of this service can be measured. So next slide, which is about the ISA 610, which is the Internet Security Act, using the work of internal auditor. So in this slide, it explains that the external auditor can be used the work of internal audit function if all of this criteria is fulfilled. So they have three conditions, which is objectivity, competency and systematic and disciplined approach. So the work of internal audit function can be used for the purpose of audit by evaluating the following, which is the extent to which the internal audit functions, organization status and relevance, policies and procedure support the objectivity of the internal auditors. So then the second one is the level of competence of the internal audit function, and the third one, the last one, which is whether the internal audit function applies a systematic and disciplined approach, including the quality control. So the work of internal audit function need to meet all these conditions so that the external audit can be used the work of internal audit. So it's for the next slide. It explains about when the external audit cannot use the work of internal audit function because of the three criteria is not fulfilled. So for the first one is the objectivity do not adequately support the activity, lacks of sufficient competence, and also the last one, does not apply a systematic and disciplined approach, including the quality control. So the next one, this is will be my last slide, which is the relationship of internal and external auditor. So for the internal and external auditor, they have some similarities and also some differences. So for the similarities, both of them have to have the competency, objectivity, methodology, and audit risk model and materiality. So for the competency, both of the auditor need to apply the knowledge, skills, and experience in auditing, in reporting the audit. And the second one is the objectivity. So the objectivity is both of the auditor need to remain objective in performing their work and reporting the result. And the third one is methodology. Both of the auditor use the same method in performing the audit. And the last one, which is audit risk model and materiality, they both of them need to decide to the extent of their task and evaluating the result. So for the differences, for the internal auditor, they are more responsible to the management, and for the internal auditor, they conduct the audit throughout the year and examine issues related to the company business practice and risk. For the external audit, they are responsible to financial statement user who rely on the auditor to add credibility to the statement. For external user, it conduct a single annual audit, which is once a year. And for the last one, the external auditor, they examine the financial records and issue an opinion regarding the financial statement of the company. So that's all for me. So I will pass to the next presenter. Thank you.
Assalamualaikum. My name is Fatieha binti Zulkifli. Now I will explain about governmental financial auditing. You must be wondering if federal or state government will be audited or not, right? Here is the explanations. Federal and state government employ their own auditing staff to perform audits in much the same way as internal auditor. All states have their own audit agency, similar to but smaller than government. Accountability Office, which is GAO, and CPF firm do considerable financial auditing of government units. As examples, some states require all city and school district financial statements to be audited by CPF firms. The primary authoritative literature for performance of government audit is Audit Manual, which is issued by Jabatan Audit Negara. Because of the colour of the cover, it is usually referred as Yellow Book rather than by its former name. Yellow Book standard was similar to GAAP standard but has been expanded in subsequent revisions to provide guidance standard for performance audits. The standards are often called Generally Accepted Government Auditing Standard. Under the Yellow Book also includes several categories of information on to audit, including financial statement of government unit, government contracts and grant, internal control, fraud, and other non-compliant with law and regulations. According to Audit Act 1957, by using guidance from Audit Manual, Auditor General is responsible to audit account of the Federation and of the state, fund established in the state or the federal territory, Article 97, public authorities, other corporate bodies in receipt of grant or loan from federation or a state, and the last one is other funds. In Audit Manual, of course, also have audit and reporting requirement, which is a formal guidelines to audit federal and state government. Other than that, it is also to ensure responsibilities fulfilled by Auditor General according to Constitution and Audit Act 1957. Standard basis that important in audit and reporting requirement is it must follow Audit Act 1957. They also must have Jabatan Audit Negara practices and experience, and the standard that has been used must be by accounting profession. They also comply with International Organization of Supreme Audit Institution (INTOSAI) and also comply with other Supreme Audit Institution (ASUSAI). That's all from me. Now we will move to the next presenter.
Hello and Assalamualaikum. My name is FADHILAH binti JAMALUDIN. Today I'm going to present about the financial auditing standard, which have the 5: materiality and significance, quality control, compliance auditing, reporting, and the last one is audit, file, and working paper. Okay, we go to the first. It is materiality and significance. The Yellow Book recognizes that in government audits, the threshold of acceptable audit risk and materiality may be lower than in an audit of a commercial enterprise. This is because of the sensitivity of government activities and their public accountability. What is the Yellow Book? Yellow Book is government auditing standard which is issued by the GAO, Government Auditing Office. Because of the color of the cover, it is usually referred to as the Yellow Book. And the second one is the quality control. CPA firms and other organizations that audit government entities in compliance with the Yellow Book must have an appropriate system of internal quality control and participate in an external quality control review program. The latter requirement exists for some CPAs but only as a requirement for membership in the AICPA and for the audit of public companies. Auditors involved in planning, performing, or reporting on audits under GAGAS must complete 18 hours of continuing professional education in which 2 years period. At least 24 of these 18 hours of training must be in subjects related to the government environment and government auditing. Third one is compliance auditing. The audit should be designed to provide reasonable assurance of detecting material misstatements resulting from non-compliance with provisions of contract or grant agreements that have a material and direct effect on the financial statement. And the fourth is reporting. The audit report must state that the audit was made in accordance with generally accepted government auditing standard, GAGAS. In addition, the reports on financial statement must describe the scope of the auditor's test of compliance with law and regulations and internal control and present the result of those tests or refer to a spread report that include the information. And the last one is audit file and working paper. Next is reporting requirement of Audit Act 1957. The first is the rule and procedures have to be insufficient to safeguard properties, assets and stores. Second one is secure and effective check on assessment, collection and proper allocation of the revenues and other receipts. And the last one is ensure that expenditures have been made only as authorized. Second is essentials account and records have not been properly maintained. And third is monies have not been fully accounted for. And fourth is monies have been expended other than for purposes for which it was appropriate or approved. And the last one is revenues collected or money expended in contravention of law or established policies. For the last slide is general guidance of auditors. The first one have a good understanding of federal constitution and other basic law. And the second one is good understanding of Audit Act 1957, audit concept, standard and practices. Thank you.
Assalamualaikum, my name is IRDINA and today I will present about operational auditing. Beyond financial auditing activities, internal auditors, government auditors, and CPAs also do operational auditing, which deals with efficiency and effectiveness of an organization. Other terms that can be used are management auditing or performance auditing instead of operational auditing to refer to these activities. So, the purpose of operational auditing is to determine the effectiveness or efficiency of any part of an organization. Testing the effectiveness of internal control by an internal auditor may therefore be considered part of effectively or efficiently if the purpose is to help an organization operate its business more efficiently or effectively. The next part is the three major differences between operational and financial auditing, which the firstly is the purpose of the audit, secondly is distribution of the reports, and lastly is inclusion of non-financial areas in operational auditing. Now I will move to the next part, which is the first differences between operational and financial auditing, which is purpose of the audit. This is the most important differences among all. For operational auditing, it emphasizes the efficiency and effectiveness of an organization, while for financial auditing, it emphasizes whether historical information was correctly recorded. The next point for operational auditing, it focuses on improving future performance, while for financial auditing, it is oriented to the past. For example, an operational auditor may evaluate whether a type of new material is being purchased at the lowest cost to save money on future raw material purchases. The second differences between operational and financial auditing is distribution of the reports. For operational auditing, the reports are intended primarily for management, while for financial auditing, the reports are typically distributed to external users of financial statements such as stockholders and bankers. The next point is for operational auditing. The auditors performing operational audit are employees of the entity and hence controlled by the management, while for financial auditing, professionals who are performing financial audit are external auditors that are not controlled by the management. The next point is for operational auditing. It is need not to be made public, while for financial auditing, it must be published publicly. And the last point is for operational auditing, it does not have a standard format, while for financial auditing, it has a standard format. The widespread distribution of financial auditing reports requires a well-defined structure and wording as shown in figure below. So, this is the example of audit report that has a standard format specifically for financial auditing. The last differences between operational and financial auditing is inclusion of non-financial areas. For operational auditing, it covers any aspects of efficiency and effectiveness in an organization, while for financial auditing, it is limited to matters that directly affect the fairness of financial statement presentation. For example, an operational audit might address the effectiveness of an advertising program or efficiency of factory employees. That's all from me. I will pass to the next presenter. Thank you.
Hi, ladies and gentlemen. Today I stand before you to discuss two important concepts that play a crucial role in the success of any organization: effectiveness and efficiency. Furthermore, I will shed light on the relationship between operational audits and internal controls, which are essential components of effective and efficient business operation. Let's begin by understanding the distinction between effectiveness and efficiency. While these terms are often used interchangeably, but they represent distinct aspects of organization AI performance. Effectiveness refers to the degree of which an organization achieves its objective and goals. It measures the ability of an organization to produce desired outcomes. On the other hand, efficiency relates to how well resources are utilized in achieving those outcomes. It focuses on minimizing waste and maximizing productivity. While both effectiveness and efficiency are important, they are not mutually exclusive. In fact, they are closely interconnected and should be pursued simultaneously. An organization may be highly efficient in its operations, but if it fails to achieve its intended goals, it lacks effectiveness. Likewise, an organization may achieve its objective, but if it does so at a high cost or excessive resources consumption, it lacks efficiency. To strike the right balance, organizations need to integrate both effectiveness and efficiency into their operations. By doing so, they can optimize their performance and enhance their competitive advantage. An effective organization ensures that its resources are allocated towards the right activities, prioritizing those that contribute most to its goals. Simultaneously, an efficient organization strives to streamline processes, eliminate redundancies, and minimize resources wastage without compromising the equality of its outcomes. Now, let's delve into the relationship between operational audit and internal controls. Operational audits are systematic reviews conducted with an organization to evaluate its operational processes, identify areas of improvement, and assess adherence to established procedures. The primary purpose of an operational audit is to enhance efficiency and effectiveness by uncovering inefficiencies, risks, and control weaknesses. Internal controls, on the other hand, are policies, procedures, and mechanisms put in place by an organization to ensure the reliability of financial reporting, compliance with laws and regulations, and the safeguarding of assets. They are designed to mitigate risk and provide reasonable assurance that operations are conducted in an effective and efficient manner. Operational audits and internal control share a symbiotic relationship. Operational audits provide valuable insight into an organization's strengths and weaknesses, highlighting areas where internal controls may be lacking or ineffective. By conducting regular operational audits, an organization can identify control gaps, assess the adequacy of existing controls, and make informed decisions to enhance its internal control framework. Conversely, effective internal controls support the objective of operational audits. They provide a solid foundation for auditors to evaluate processes as well as ensure the reliability and integrity of data used during the audit. Furthermore, internal controls help auditors identify potential risks, assess the effectiveness of control activities, and make recommendations for improvement. In conclusion, effectiveness and efficiency are two pillars of organization AI success. They are not mutually exclusive but rather interdependent. Striving for effectiveness without efficiency or efficiency without effectiveness can lead to suboptimal results. Moreover, operational audits and internal controls form a mutually reinforcing relationship, where audits provide insight to enhance controls and effective controls support the objective of operational audits. By embracing both effectiveness and efficiency, and by integrating operational audits and internal controls, organizations can achieve their goals, optimize their performance, and navigate the ever-evolving business landscape with confidence. Thank you.
Right. Assalamualaikum warahmatullahi wabarakatuh. My name is NOOR and I will proceed to the next slide, which is the type of operational audits. There are three types of operational audits. The first is functional audits, the second is organizational audits, and last is special assignments. So the functional audits are a means of categorizing the activities of a business and may be categorized and subdivided many different ways. An audit deals with one or more functions in an organization. So, as we know, a functional audit has the advantage of permitting a specialization by auditors. So, certain auditors within an internal audit staff can develop considerable expertise in an area, such as production engineering. They can be more efficient and effective by spending all their time auditing in the area. And number two is organizational audits. So organizational audits and organization deals with an entire organizational unit. They emphasize how efficiently and effectively functions interact. And the last is special assignment, arise at the request of a management for a wide variety of audits. So, such as for the special assignment, such as determining the cost of an effective IT system, investigating the possibility of fraud in a division, and making recommendations but reducing the cost of a manufactured product. So next, who perform operational audits? The first is internal auditors. So the internal audit department do both operational and financial auditing. They have an advantages in doing operational audits. And number three, the head of internal audit department must report directly to audit committee. And the last is internal audit department must have access to an ongoing communication with audit committee of the BOD or board directors. And number two is government auditor. So the federal and state government auditors perform an operational auditing often as a part of doing financial audits. So there are two, separate by two. The first is economy and efficiency audit, and next is program audit. For the economy and efficiency audit, first is whether the entity is acquiring, protecting, and using its resources economically and efficiently. Number two is the causes of inefficiencies or uneconomical practice. And number three is whether the entity has complied with laws and regulation concerning matters of economy and efficiency. And for program audit, the first is the extent to which the desired results and benefits established by the legislature or other body are being achieved. Next, the effectiveness of organizations, programs, and activities or functions. And last is whether the entity has complied with laws and regulation applicable to the program. So the last is CPA firms. The audit consists of identifying operational problems and making recommendations. Number two is the background knowledge about client business. And number three, engage a CPA firm to do auditing for one or more specific part of its business. And last is engage with CPA firm only when the company does not have an internal audit staff or if the internal audit staff lacks of expertise in a certain area. So for the independence and competence of operational audits, the two most important of qualities for an operational auditor are two. The first is independence and number two is competence. So for the independence is seldom a problem for CPA firm auditors because they are not employed by the company being audited. And number two is for competence, it's necessary to determine the cause of operational problems and to make appropriate recommendations. Right, so that's all from me. I will pass to the next presenter. Thank you so much.
Hi, my name is MOHAMMAD SUHAIMI. Today I'm going to present about criteria for evaluating efficiency and effectiveness. So there is two types of criteria, the specific criteria and the source of criteria. To establish a criteria for operational auditing, auditor could define their objective, whether some aspect of the entity could be made effective or efficient and recommending improvement. So the specific criteria is usually desirable for an auditor before starting an operational audit. It may raise a question that may use to evaluate a plan layout. This is for the operational auditor. So the question that might be arise will be, were all plan layouts approved by Home Office Engineering at the time of original design? Has Home Office Engineering done re-evaluation study of plan layouts in the past 5 years? And is each piece of equipment operating at least 60% of capacity in 3 months or more each year? All of these questions is the example of the specific criteria that auditors might want to look at before performing an operational audit. So if an auditor wanted to perform a financial audit, the question might be different. For example, if they're auditing a firm, that might ask the question, what type of accounting treatment that the company use, whether they use MFRS, MPERS or MPSAS based on the firm. And all of these specific criteria that they came out from the source, from many types of source of criteria. So the first one is the historical performance. The historical performance criteria can be based on the actual result from the prior period. So the auditor can determine whether the things have become better or worse. For the historical performance, give a comparison for the company to determine whether the things they're done is becoming better or worse. So the next one is benchmarking. So entities within or outside the client organization may sufficiently similar to the client's organization that use their result as the criteria. So in the benchmarking process, auditor need to pick carefully which firm or company that might be used for benchmarking in the benchmarking process. So if the auditor wrongly pick a company that does not relatable to the business operating company that they audited, the result can be very different. And the next one is the engineer standards, and auditor can use their time and motion study to determine efficient production output rates. The criteria are often time consuming and costly to develop because they require a considerable expertise. And the last one, the source of criteria, is the discussion and agreement. This party involved it should be the management of the entity to be audited and the operational auditor. Through the discussion, there can maybe many outcomes to create many specific criteria in performing the operational audit. So that's all from me. Thank you very much.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad ARIFF bin Muhammad Muslim. So today I will present about phase in operational audit. So it consists 3 items, which is planning, evidence accumulation and evaluation, and reporting and follow up. So the first one is planning. Auditor are required to spend more time with the interested parties, agreeing on the terms of the engagement. It consists of 5 items. The first one is scope of engagement. During the planning phase, the auditor and the client discuss and define the scope of the audit engagement. This includes determining the areas or process that will be audited, the time period covered, and the specific objective of the audit. Second one is staffing. The auditor assessing the staffing requirement for the audit engagement during the planning phase. They consider the necessary skills, expertise, and experience needed to perform the audit effectively. Staffing decision include determining the audit team's member and their respective roles and responsibility. Number 3 is background information. The auditor gather background information about the audited entity, such as its industry, operation, organizational structure, and regulatory environment. This helps the auditor understand the context in which the organization operates and identify potential risks and area of focus for audit. Number 4 is understand internal control. As part of the planning phase, the auditor assess the internal control system of the organization. They seek to understand the design and implementation of internal control relevant to the audit objective. This understanding helps the auditor identify area of higher risk and plan the appropriate audit process. Last one is decide on appropriate evidence. So during the planning phase, the auditor determine the type of evidence they need to gather to support their audit conclusion. They consider the nature of audit objective, the level of assurance required, and the available audit procedure and technique. This decision help in designing an effective and efficient audit approach. Then the second one is evidence and accumulation and evaluation. Accumulate sufficient appropriate evidence and decide whether it is reasonable to conclude. So the first one is documentation. Auditor review relevant document, records, and other written evidence to gather information and support their findings. This may include examine their financial statement, contract, invoice, and bank statement. Documentation provides tangible evidence and helps auditor verify the accuracy and completeness of transaction and disclosure. Number 2 is client inquiry. The auditor engage in discussion and interview with key personnel within the client's organization. They inquire about process, control, and activities to gain a deeper understanding and to collaborate the information obtained through other procedure. Client inquiry helps auditor gather first-hand information and insight from individuals involved in the operation. The third one is analytical procedure. Auditor use analytical procedure to evaluate relationship and trend in financial and non-financial data. They compare current and historical data, industry benchmark, budget, and focus to identify unusual fluctuation, potential risks, and inconsistencies. Analytical procedure provide auditor with broader perspective and help in identifying areas that require further investigation. The last one is observation. So auditor directly observe process, activity, and control in action. This may involve witnessing the physical counting of inventory, observing cash handling procedure, or reviewing security measure. Observation allow auditor to assess the effectiveness of control and identify any deviation from established policy or procedure. So the last one is reporting and follow-up. So there is two major in operational and financial auditing report. The first one is in operational audit. The report is usually sent only to management. So this means that the primary purpose of operational audit is to provide management with insight and recommendation to improve their efficiency, effectiveness, and control of their operation. The report is intended for internal use and focus on providing actionable information to help management make informed decisions and implement necessary changes. So the second one is tailoring of each report is required in operational audit. Operational audit report often require more tailoring compared to financial audit report. Operational audit are typically conducted with specific focus on an organization's operation, process, and control. The nature and scope of operational audit can be vary significantly based on the objective and area of concern identified during the audit. This is the example of operational audit finding. So outside janitor firms save 160,000 ringgit. So auditor found many janitorial tasks were not completed as required. Auditor found many janitor tasks were not complete as required. This observation indicate that during the audit, the auditor discovered that several janitor tasks were not being performed according to the specific requirement or standard. This finding suggests a potential breakdown in the internal control or inefficiency in the janitorial process. The auditor would likely recommend improvements to ensure that all tasks are completed as required to maintain cleanliness and hygiene standard. Then the auditor need to use the right tool, which is only a few of the truck were actually delivering and picking up vending machine. So this statement indicates a potential problem with utilization of truck for delivering and picking up a vending machine. It suggests that the organization may not be efficiently utilizing its resource, resulting in underutilization or inefficiency in this aspect of operation. The auditor may identify this as an area for improvement and recommend measures to optimize truck usage and ensure timely and effective delivery and picking up a vending machine. That's all from me. Thank you.